Welcome back, everybody, to another market day. I am your designated inquirer. My name is Axel, and today is 10/16/2020. Now, there was a lot of things that happened today in the market, one of them being that it went down, but it is important to know why. Well, the reason why has been probably the very same set of reasons we've been thinking the market could go down the past couple weeks at minimum. Let's take a look real quick at what happened to the NASDAQ real quick. The last about 30 minutes or so, it basically decided the last hour it slid. Did not decide to slide, it slid. It was subject to a slide. Now, investors at the end of the day were basically with this proposition of not necessarily knowing what was going to be happening throughout the weekend, but what was taking over, what was increasing in probability, what was decreasing in probability. Those two things is what was important, what led to people basically selling off into this weekend and not say into last weekend, etc. Because what has been happening for the past few weeks, it has been moving upward. But why? From about this point right here, since basically Donald Trump decided to end stimulus talks, the market dipped, and then ever since then they've been trying like heck to increase the probability of a deal actually happening. But at every step of the way, there was something that was missing. Input from Senate Republicans. They were not even present to negotiations this entire time. So for me, the reason why I was ranting and raving the entire time that it was going up is that the probability then as now was basically the same, that there was no general agreement, even though the practice of the House and the Treasury Secretary Mnuchin begrudgingly working together day after day, call after 20-minute call, every day, trying to inch closer together to get to a dollar amount, but also an understanding of where that money should be spent. Mitch McConnell was nowhere to be seen. So there was always never really a substantially increasing chance with an entire leg of the government not present in those negotiations. And not until maybe like a couple days ago was that probably starting to become more and more apparent when Mitch McConnell only offered a $500 billion stimulus package, which maybe only included the stimulus check, and that's it. That's it. That's the only thing he offered. So if there's no deal that's going to be coming through, all of this increase in market price, I think probably has to be erased, because apart from there being a couple extra things here and there that added to the general value of the market, there is no significant reason why the market should be higher than it should be lower, because we still have an abundance of people unemployed, on unemployment, no longer receiving extra money from their unemployment checks, that are probably having to move back home, to move entirely. They have to leave the cities in general because their work, their businesses can no longer function there, because people are now the thing that you have to try and stay away from. This is the world that we live in. This is the world that we live in, and people are adjusting accordingly. The only people that has not adjusted accordingly since May has been Mitch McConnell, that has not passed anything meaningful to contribute to the stimulus of this economy. Now, how does this affect the future? Where can we go from here? More than likely lower. Like I said, to well around where basically Trump had initially said no more stimulus, no talks here. But here's the thing, it didn't end here, or if it was here, I'm not exactly sure what exact day it was, but we're probably going to be retesting these lows And I don't think we're going to be holding it, because there's now more people on unemployment, and the problem has gotten substantially worse since this time. So there should be no reason why there is more value to the market than not. Because even though some companies may be able to provide us with some sort of increased earnings over the last quarter, third quarter, what is happening now into the future, into the rest of this fourth quarter versus not, is that things are getting worse. And so people have to, companies, CEOs, CFOs have to talk about that during those conference calls. And so their future projections and what the economy can do and what it's capable of and when they're going to be coming back to pre-coronavirus levels is probably going to get pushed out further. So one by one, we're going to be seeing during this earnings season, CEOs and CFOs having to talk about what their projections are and how they see the economy as they see it in relation to their businesses. And one by one, they're more than likely, it's not a fact that each one is going to do this, but more than likely, each one is going to have to revise their model for no stimulus till at least January. Because will the current players right now, as they stand, make any sort of movement even after the election? No, we're probably going to have to wait till an entirely new government is in place this next January. And even then, we'll probably have to wait another quarter while they haggle and fight and bicker and everything for an entire quarter, for things to get substantially worse, for people to get really messed up, for them to do anything about it. So if we have a fully functioning government of maybe the same party, January is the earliest we can get something done. If we don't, we may see something get passed in March, and that's a big if. That's a big if, because if Mitch McConnell is still in the Senate while there is a Democrat president and a Democratic House, it's going to be very difficult. If there is both a Republican president and a Senate Republican majority, if there's a Democratic House, they will more than likely fold and give this president whatever stimulus that they deem worthy. They're not necessarily going to fight. And there's quite a few other scenarios where certain things can happen, but whether or not that actually happens is maybe further on down the line, as whether or not it's more statistically significant and or less. So we're not necessarily going to talk about them, but what we are going to talk about is two particular stocks, one being Tesla. Tesla. My bad. TSLA. There we go. Tesla, which today it did dip. It did make a dip here at the end of the day. All right. Sympathetic with the rest of the market and with what the rest of the market has been doing, except for after hours, which more or less volume has dropped off to the point where those traders who are still around have not yet decided what they want to do with their money. Now, that picture looks a little bit different for this next stock, which deals in the same market in electric vehicles, but only almost exclusively in China. I believe XPEV is the name of that stock. While it did drop initially, with which was probably an increase in the value of the dollar here, the value of the dollar did more or less kind of flatten out for the rest of the day, and this is probably what led to significant zero movement for this stock. So even though both this company, XPEV, and Tesla are in the same market, both producing electric vehicles in China, Tesla was more sensitive to what was happening in the United States than XPEV. That's why it probably shows some relative strength in regard to the market. But should the market improve, it is not necessarily also guaranteed that XPEV will see also that same benefit, because so long as there is an increasing dollar, there will probably also be a decreasing XPEV. If there is a cheaper dollar, there will probably be a higher XPEV. I think it probably is more sensitive to what is happening on a currency basis than what is actually happening with either the stock and or with what's happening with Tesla, even though they kind of generally seem to be moving together generally. But there is your split into the difference as to why they not act the same, and probably why other companies that may be in the same field but in different countries altogether may act differently as well. Now, why is the dollar moving down and moving up? Well, this morning, $DXY, this morning we basically got the announcement. Everybody was, I think, hoping that there would be some sort of deal between the EU and Great Britain or England, and there was no deal. Talks basically crumbled, and from this point on, the dollar basically rose and more or less remained flat along this area right here, and it has basically stayed there since. What's happening generally in the rest of the United States will also probably contribute to a still increasing dollar later on this month, I do believe. But in any case, this increase in the dollar here was probably subject to not only Great Britain and the rest of Europe not coming to a deal, but also coronavirus shutdowns for a good portion of the European Union and England, and now increasing cases here in the United States. So, yeah, that's been your market wrap up. This has been your Designated Inquirer with Market Day, and I hope you guys have a good rest of your weekend. So stay safe, stay healthy, and until next time, take care. Bye.